In this video, I want to teach you two trading strategies that are very accurate. Before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, let's begin with the first strategy. For this trading strategy, we need to add two indicators. To add the first indicator to our chart, here we click on indicators and we search STT filtered N-pole Gaussian filter. This one, which is an editor specs indicator and written by LOXX. Alright, this is the indicator, and as you can see, it is overlaid on the price chart. This is a very powerful buy-sell signal indicator, which by different layers of filtering, it helps you to catch the turning points of the market where momentum is increasing in that direction. As you can see, we have a line that changes color between green and red, and depending on the color changing of the line, we have buy-sell signals. L for long position signal and S for short position signal. But we need to change the settings of the indicator for our trading strategy. So we go to the settings of the indicator, and first here for Heiken Ashi better smoothing, we set it at T3, and then here for filter options, we set it at both. So it will be based on the both of price and Gaussian filter. And then here for filter deviation, we set it at 2. And for filter period, we set it at 13. And here also we remove the coloring of the candles, so we will not get distracted by the color of the candles. We're done with the settings of this indicator. And now we need to add the second indicator. So here again, we click on indicators and we search MACD. This one, moving average convergence divergence, and we need to change the settings of MACD. So here we go to the settings of the MACD indicator, and here for the fast length we set it at 100, for the slow length we set it at 200, and here for signal smoothing we set it at 50, and then here in the style tab we remove MACD line and signal line because we don't need them, and we are going to use only the MACD histogram. Everything is already set on the chart, and before I start explaining how you can find buy-sell signals based on this strategy, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a comprehensive guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, getting back to our trading strategy, this MACD with the special settings that we made will help us with the longer term trend of the market. And this indicator will help us to take buy-sell signals in the same direction with a trend. When MACD histogram is green, it tells us that the market is trending up and we should only take long position signals. We don't take short position signals because they are against the trend. In this situation, short position signals only tell us that probably a pullback is forming on the chart and we should be ready for a long position signal. When we have a long position signal here in MACD histogram, the bar should be dark green. If it is light green, we don't enter any trade because this shows that the upside momentum is weakening, but when it is dark green, it tells us that the upside momentum is increasing. So when this candle is closed and we have a long position signal printed on the chart, if the bar in MACD histogram is dark green, we can enter a trade. So here the buy signal is confirmed, and in practice we could enter a long position at this point when the new candle was opened. The stop loss for this trade is placed below the previous swing low and profit target at 1.5 risk to reward ratio. There is another long position signal here, but this is rejected and we don't enter any trade based on this signal because you can see that the bar in MACD histogram is light green. In this case, if we entered a trade based on this signal, that would be a profitable trade. But in other cases, the price could turn down because this shows that the upside momentum is decreasing. So to decrease our risk and only take higher probability trades, we only focus on the signals where the bar in MACD histogram is dark green. Alright, on the other hand, when MACD histogram is red, it tells us that the market is trending down and we should focus only on short position signals. In this situation, we don't pay attention to long position signals because they are against the trend and they only tell us that probably a pullback is forming on the chart and we should be ready for a short position signal. When we have a short position signal, the bar in MACD histogram should be dark red. If it is light red, we don't take the signal because this situation tells us that the downside momentum is weakening. But when it is dark red, it tells us that the downside momentum is increasing. So we have more signal and higher probability that the price will probably further decline. So when this candle is closed and a short position signal is printed on the price chart, if here in MACD histogram the bar is dark red, the sell signal is confirmed, and in practice we could enter a short position at this point when the new candle was opened. The stop loss is placed above the previous swing high and profit target at 1.5 risk to reward ratio, and you can see that after that we had decline of the price reaching to our expected profit target, which is at 1.5 risk to reward ratio. So to decrease our risk and only take higher probability trades when we have a sell signal, if the bar in MACD histogram is light red, we don't take the trade. We take a short position signal only if the bar in MACD histogram is dark red. Please pay attention that this is not a 100% win rate trading strategy. There is no trading strategy with guaranteed signals. Losing positions are always part of the game and you will encounter false signals. So you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is in the description and make sure you watch it later. Alright, now let me teach you the second trading strategy. In this trading strategy, we have two indicators. To add the first indicator, here we click on indicators and we search G channel trend detection. This one, which is written by Jagged Soft. Alright, this is the indicator, and as you can see, it is overlaid on the price chart. We need to change the settings of this indicator. So here we go to the settings of the indicator, and first here for the length we set it at 200, and then here we turn off showing the signals, and after that we go to the style tab, and here for the background we increase the opacity to 40%, so the ribbon on the chart will be better visible. Alright, we are done with the settings of this indicator, and now we need to add the second indicator. So here again we click on indicators and we search CCI, this one, commodity channel index, and we need to change the settings of this indicator. So here we go to the settings of CCI, and here in the inputs tab, here for the length we set it at 100. Alright, everything is already set on the chart, and let's see how we trade based on this trading strategy. When this ribbon is green, which tells us that the market is trending up, we should look for long position opportunities. We want to find trading opportunities in the pullbacks, and CCI can help us with this. In times that CCI line goes below its moving average line and they are below 100, this tells us that probably a pullback is forming on the chart. And when CCI line crosses back above the yellow line, it is when we can say that probably the pullback ended and the price is gonna advance more. But we can have a higher probability setup and focus on the cases where CCI line goes below -100 while the ribbon is green and telling us that the market is trending up. In this situation where the ribbon is green and telling us that the market is in an uptrend, when CCI line reaches to or goes below -100, this shows a deep pullback and extreme oversold in the market. When CCI line crosses back above its moving average line, and if it is above -100, the buy signal is confirmed, and in practice we could enter a long position at this point when the new candle was opened. The stop loss below the previous swing low and profit target at the level that makes risk to reward ratio equals 2. On the other hand, when the ribbon is red and telling us that the market is trending down, we look for short position opportunities. We like to find cases like this where CCI line reaches to or goes above 100, which shows a deep pullback and extreme overbought in a downtrend. When CCI line crosses back below the moving average line, and if it is below 100, the sell signal is confirmed, and in practice we could enter a short position at this point with the stop loss above the previous swing high and profit target at risk to reward ratio of 2. Please pay attention that although the accuracy of this method is very high, but it doesn't mean you will not encounter false signals. No, there is no trading strategy with guaranteed signals, and you need to manage your losing positions in a proper way so you can limit your losing positions to a minimum amount and protect your trading account from falling significantly. 1% rule is the best risk management strategy and recommended by professional traders. I have a complete guide on this. The link is in the description, and I highly recommend you to watch it because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.